All right, man, let me say hello and welcome to each and every one of you. Doug here, ready for another edition, the weekly edition of Stock Market Mutterings, where my slogan, where my words and my promises to you guys out there that are watching is I will always take a grope in the murkiness. I'll try to do my best to make some sense out of the stock market for you. And I hope that whatever I say just gives you that little piece of clarity to put some money in your pocket. If it does, just show your support by subscribing to this channel, liking the video, commenting. Tell me what I can do better. Tell me what you like that I do. Just whatever you, just show your support that way. I just appreciate what I'm able to do for you guys. I come to you yet again here on a Sunday, grizzled, pounding down cup after cup after cup of coffee. Woo! Just a tired guy, Just did out some other camping this week. Oh man, I get so wore out sometimes. But I'm ready. I'm ready for Monday. I'm ready to get it going because we got some good stuff to talk about. We're starting to get this, I don't know how to define it. I'm going to call it psycho market, crazy market, wacko market, silly market. Ever since last Thursday's sell down, I'm going to call it a sell off. Ever since you got that bell-to-bell sell-off, you've been up and down, back and forth. So we're going to talk about why that's happening, but I also want you new guys or some of you traders to understand that recoveries don't happen from one day to the next. Sometimes they feel like that, but the market is very predictable in its nature and the way it does things. So you can go back in all the charts and you'll look at the same type of formula that's happening. The market ticks up, ticks up, ticks up, ticks up. When I'm saying tick up, I'm talking about melting. It's just melt, 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 melt. Every day green, every day green. Everybody's like bullish. It's like a little hypnotizing thing. Let me get something like a hypnotizing thing. You are bullish. You are bullish. You have FOMO. You have FOMO. Anyway, sorry to be silly, but it's like hypnotism. And that's always when it happens. Then you get this correction, whether it's 5%, 10%, 15, 20, doesn't matter. But once you have that initial hit, it's going to take the market a week or so, maybe 2 weeks, maybe a month before it kind of just settles down. It's going to go through a period of volatility. It just kind of resets the charts, resets everything. That's just the way it goes, guys. So we're kind of in that phase. So what led to this? Well, the market's also very finicky at what it decides to all of a sudden say, hey, this is good news, this is bad news. Because sometimes we roll along and there's like nuclear missiles being launched in the ocean, bullish. 50 million people out of work, that's an exaggeration, bullish, you know? And then all of a sudden, the Fed might not want to stimulate for forever, print money forever, bearish. You know, it's like you never know what they're going to pick. So you had a combination thing. You had some China and India stuff there. You had some Fed talk after the Fed meeting that wasn't so inspiring. You know, they want the Fed just to continue to print money relentlessly, which they are going to do. But the way Powell left that off was kind of like, we don't want to just keep doing that. Of course, they don't want to keep doing that, but they are going to keep doing that. So the market's kind of sketchy about that. Which brings me also to the coronavirus, the pandemic that continues to loom over this market, which is very interesting to me because this, again, I'm not complaining. I'm just telling you, if you want to be a trader and investor, this is the stuff you got to deal with. Because if you try to make sense out of the market, it never makes sense. And this is what this whole talk is always about. Why I do these things is to share with you. This is what experience is. This is what you need to know, what you don't need to know. And this is a coronavirus thing. It's like we've been all isolated and quarantined for months, right? We got the whole social distancing. Everywhere you go, people are wearing like biohazmat suits and stuff. Like we're all like lepers. And this is like Resident Evil kind of scenario. And then all of a sudden the country wants to open up. They start this reopening plan where they slowly start opening restaurants. They slowly start opening places. They slowly start congregating people together. And then cases spike. And it's like, well, yeah, of course when we get together, cases will spike. All diseases spike when we come in contact with each other. You know, if there was like cases of the flu, and then you went out, there would be more cases of flu because people get together, you know? But our bodies build immune systems and stuff. I mean, that's another topic, but of course they're going to spike, you know? It's not going to go lower just because we're out in front of people. That makes no sense. Markets somehow hasn't figured that part out. I don't know. So anyway, let's talk technicals. Let's talk ideas. Let's talk about where we might go. I think you've got to get down here a little bit lower into these areas of support. You've got two spots, I think, that have to be tested in order to prove that this is just a bump in the road, like every bump in the road has been. And that would be the emotional 300 level, and then the support that you had about a week or so down there when the market got into the 297s, 95s area. I think if you get a double test of that, you get a test a little closer to that 200 moving average right there on the bottom chart. If you get down in there, you find some support. It's just going to be one of those ordeals with the market. So right now, as it looks, guys, I'm not expecting that this is the beginning of a longer, more drawn-out sell-off. I'm not comparing this to 08, where, you know, the market bounced 20, 30, 50% or whatever silly amount was, and then retraced lower. I mean, maybe that happens. I think we're in a different environment, and that different environment is a Fed that will do whatever is necessary to print money and calm markets, and that's the only thing that's important. And that's what we're in. So that's what I'm thinking. If that happens, I would expect us to move back towards the 320s where this whole thing started. But still, my thoughts, feelings, and sentiment here that I kind of ring is we probably got to go a little bit lower. Especially, it would be nice if we begin the week like that lower. Just shake everyone out. Just shake the tree a little bit more. And then we all kind of move from there. Now, on that note, we got to talk about these Qs because, you know, this thing, it's not experiencing what you're seeing in the Dow and the SPY. It's like this mad rush to tech. Tech is so hot. So what I'm saying is about if you guys want to focus on something, it seems silly to try to be the hero and pick bottoms on Dow stocks that are getting smoked, or, hey, this stock is so low, I got to buy it. When people are religiously chasing tech names, like, man, I mean, look at this. Qs, they're just solid. And I was kind of looking at this. I brought it up a few times on social media there. Like, this Facebook. This Facebook is laying right here ready for a triple top breakout. So one of the things that you also might run into as well, I'm just saying that maybe you do. I ran into these problems when I wore a younger man's clothes as a trader. And that was, I always thought, hey, I don't want to buy a breakout when the market's down a lot. You got to pay attention to the chart. It pays to pay attention to the chart you're trading. This Facebook, here's what's going to happen. Either Facebook is going to force the issue and break out. I mean, it's come back too far. It's held too long not to try to pop this 241. Either the market just gets so bad and it can't do it. Or if the market just has any stability, or if the market just turns bullish sometime this week, this thing is just going to explode. It's just coiled here waiting for the excuse to knock itself loose. I mean, we've had wild back and forth, choppy, insane days, and this thing just keeps clicking it off. And then you have things like SHOP. It's like, you know, we're talking about doom and gloom. SHOP, it just ramps up $100 every day. I mean, these things, I wouldn't just recommend you buying SHOP here. It's, you know, I recommend it, but what, you'd be doing good if you did. I mean, look at this. What a monster of a stock. So I kind of want to watch this Facebook and see how it goes. We've been talking for quite some time about Netflix. I already have a long position in this for a swing, by the way. I should make that known. But I've been talking about that every week. It's kind of broke out here. I'm expecting this thing to make it back to the 458s, back to the highs here. So again, you know, tech is still strong. So I mean, we're probably going to run into a situation here where you're going to see a couple of things take place. You're either going to get a situation where the pressure from the overall markets, I mean, look at this TER, TER. You're going to get pressure from the overall markets that's going to cause some liquidation in techs, or just the sheer strength of the techs is going to just maintain the entire market. They're just going to lift the other indices. I mean, I know it's a little here expensive too, but Tesla, I mean, Tesla's coiled up here, looking really good. I mean, there's all these names still look relatively good. Wayfair, still grinding it out. And I mean, I wouldn't invest in this one here, but for a day trade, I'd buy dips on this. It's just, you know, another one. I mean, look at these stocks just continuing to go and go and go. The ZMs, the DOCUs. I mean, look at DOCU just consolidating up here at highs, not giving back much, if any, of this monstrous run up. And, you know, there's been a couple of hits here and there on ZM, but still, look, ZM still just moving. I mean, there's no change in tech land. There's a bad week in tech is like 3 cents off of the Qs or something. I mean, these things are still getting accumulated. They're still, you know, being relentless. Apple with some negative news this week. you know, about stores. But look, the charts are still tight. Now, I can't say that this is always going to happen and that they're not going to change immediately. That's always a possibility. I don't profess that I know everything or I'm the smartest human being in the world, but still the money's flowing into tech. That's what I'm seeing here on charts, what everything is telling me. So that's where we need to be. If the market's going to stay stable and these things start breaking these ranges or they pull back early and find supports, they are still longs. Now, some of these might turn out to be shorts because just out of their ludicrous nature. And I think if that's the case, there are a couple here. Like I feel Lulu might be something worth taking a look at short. When I say short, I'm thinking probably more of an intraday trade. I'm still not in a position now or feel like I'm in a position where I want to swing trade shorts using an individual stock. If I felt that we were really going to roll over, I'd probably just short the Qs or something, or short the market itself rather than trying to pick out an individual stock at this moment. Again, that philosophy there might change. But Lulu here, a stock that's been in a significant run-up, maybe it sells off a little bit. But still, when you're seeing the sell-offs, you're getting support in a lot of these areas still, which still is bullish. So, in a recap, I'm still overall bullish, but I would like that tree, shake that tree, get it to come down, get it to come down a little bit more. I think it's good for all of us if that happens. Gets down there, gets better prices. We can reload. Still a buyer of tech, man, until you can show me something else. Until you can start, and next could be tomorrow. I might change my mind tomorrow. Remember, I am a day trader by nature, so I move within the day. And sometimes I get up and go, man, I was totally wrong on that one. So let me just readjust. I mean, that's the way life is. Because it's really senseless to try to predict the future. I mean, we got to take it day by day, trade by trade. But just thinking out loud here, I'm just feeling that right now, any significant dip is a buy on tech. Just still buying tech. Like you wake up, Facebook down 3, you probably should be looking for a spot to buy that. I doubt it just gets smoked for 11. It could, but I don't think that's necessary. You got futures opening up negative here, and it's kind of the same thing happening as we've seen usual. On my last one here, I'm looking at the Dow futures. You got a gap down, spends 5 minutes there and already grinding up. So I don't know if this is going to fill in the gap by the time we all wake up. We'll see. But as always, guys, if you need help, I'm here. Visit my live trade room. Trade with me ever since I've been in the new office here. Trading live. And yeah. Oh, by the way, for you guys been asking, got a new happy hour coming out in the next day or so. I promised I was going to do a happy hour. Got a new one coming up. So anyway, thanks for watching this video. Thanks for your support. If you don't, just subscribe to the channel. If you want to keep up to date with everything, next to your subscribe button, there's a bell icon. Click that bell icon. You'll get notified every time I make a new post. Until next time, guys, take care. Trade well. Talk to you soon.